Prime XPT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on Prime XPT in minutes.
Ferrum Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit theburbnest.com/Ferrum. Globe is a crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts with Bitcoin collateral. Sign up today at theburbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at theburbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit theburbnest.com/YFDAI. Bistro is a decentralized peer-to-peer food marketplace that makes ordering food more convenient and rewarding for both providers and customers. Learn more at theburbnest.com/bistro.
Hey everybody, it's Crypto Birb speaking. I hope everything is working. The mic is working. The glasses are on. The Hawaiian t-shirt is on. Lots of parrots if you look at it. Lots of birds. I'm pretty happy to be hosting this week's webinar, which is streamed directly to our YouTube, to my YouTube, to the Birb Nest's YouTube, to our official The Birb Nest YouTube account. And welcome. I'm very happy, guys, to see you. And whenever something just disrupts, with a microphone, just feel free to drop me a note in the chat, okay, so that I know. As always, feel free to ask your questions in the chat. So I'll later have about 5 to 10 minutes to answer some of them at least, okay, do my best. And before we kick it off, I want to remind to everybody who is new to our brand new YouTube channel, this is, what we have recently started with the daily uploads, okay? Each and every single day, we decided to create a new video content, which is, usually short for all the people, who are interested in the cryptocurrencies, in trading, in commodities, forex, all the markets, okay? By myself and my team. If you are new, make sure you stay subscribed. Make sure you hit the subscribe button, smash the likes button as well, and leave a thumbs up. As I said, just leave some comments so that I can know that you are there, that we can get those YouTube algos pump us to the heaven, and same goes for Bitcoin, okay? So to start with, I'm going to cover a couple of very interesting topics on this very session, okay? It's going to last about 55 minutes from now, okay? And I want to bring to you a quick overview of the markets, okay? For Bitcoin, quick technical analysis, okay, of what's going on, especially after today's Elon Musk's tweet, okay. Then we are covered in the third part. We're going to cover the market manipulation. I'm going to talk about the bots. I'm going to talk about professionalist breakouts, Berkshire Hathaway, Fed versus gold. I'm going to keep you notified with the materials that I actually gathered. Okay. On top of that, right after, I'm going to cover the mean reversion. Okay, the nature of the statistical nature of this for the time series data, which the price action returns on the asset are. Okay. Kind regards also from Poland to Indonesia. I can see some nice, decent comments. Love you all, guys. And with the mean reversion, going to cover one of the simplest but so far best tweets in my opinion with regards to BTC's performance. Okay, and then we will have about 10 minutes for the chart quick requests. So to actually rush in to give you the details for the Bitcoin's technical analysis, okay, let's go straight away. Okay, I'm going to show you today's chart. Okay, in today's chart, okay, I'll need to actually just give me 1 second. I'll need to bring the drawing tools. 1 second, just need to find it somehow. It actually closed. There you go. It should be all done already. Okay, so bring back the screen sharing. Okay, here we are. What can I say? We are seeing some downside. Okay, today, as we know, past like a clockwork, each and every single weekend so far this year. okay, has been more of neutral or bearish so far. Okay, this is of course usually coming from the fact that some bigger investors, they do not really choose to operate any trades, throughout the weekend, mostly because the institutions are closed for the weekends. Okay, same as any bigger exchanges, just go down for the weekend, for the clearing system and everything. But here we have seen so far the weekends which are way worse performing time of the entire week this year so far. Okay, so as we are heading into the weekend, because it's Friday today, okay, you are seeing something that is nominally declining for the Bitcoin's price, but it happens also for the other markets, not just Bitcoin. Okay, so having a quick overlook, what can I say? It all started decently. Okay, you would have this decent trend change indication for closing right at or slightly over the baseline, the hybrid average, okay, which signals some sort of like a trend, reversal, at least for the short term, okay, to the upside. And while this trend reversal coming after this trend indication change does not happen instantly. Okay, it's not that you can see instant effect, rarely ever it happens so that you would have an instant effect after the signal flashes. Okay, usually you have to wait at least a couple of days. So it's not that it is wrong, it just actually needs some time, okay, to actually verify if it's wrong or right. But one way or another, we are of course in the sideways, and as long as the US are in the sideways, anything can happen with regards to this overall chaotic performance. Okay, sideways is the worst, I should say, next to the triangles, next to the symmetrical triangles, are usually not so well reliable patterns. Okay, they're not so much reliable because mainly they have often too many fake movements. Okay, they often perform with fake breakouts, which I'm going to cover in some minutes from now. Okay, but hoping you can see all of this that I'm sharing. Okay, there are some new comments loading, I'm sure. Okay, there you go. Okay, whatever happens in range, it's, as I stated recently, it's not bearish, it's not it's not bullish either. Okay, it's just neutral. Range is defined by the high extreme and by the low extreme. Okay, by the range low, range high, no matter how we call that. Okay, and this entire price action inside any range pattern, inside any sideways movement, okay, rectangle pattern, if you will, is considered chaotic. Is considered way more random than outside this pattern. Okay, which is why you exactly would see so many, potentially bullish patterns. Let's say you would have, I don't know, some bullish pennant, happening inside this right after the upside, pullback, and it's still happening within the boundaries of the range. Okay, and you could believe that pennant technically is bullish. Okay, but what happens in the range is usually it lacks the power and declines. Okay, so it kind of like means that each and every single chart pattern that you could normally read as bullish or bearish, or more bullish or more bearish, in the middle of a trend, inside the sideways range, inside the trading range, okay, it's neutral. It's not reliable. Trading the breakouts most likely will get you not to the places you want to be. Okay, so each and every single case, I don't know, there was an example here, okay, of this symmetrical triangle. Okay, you had this symmetrical triangle, you had the breakout, okay, and then it turned into a fake out. Okay, so that is what I'm talking about. Pure example. Whatever happens between the boundaries, okay, when the market is not trending in either direction, upwards or downwards, it is pretty much more or less random. Okay, and the only strategies, just like I explained on live trading stories last week on our Instagram, you have three strategies, three actual, I should say, approaches to trading the ranges. Okay, so for trading the ranges, you can actually focus on two free approaches. First of all, you can focus on buying the lows or selling the highs. Okay, that is the strategy, the approach number one. Okay, so that the only trades you take is that you short the previous resistance areas and you buy the previous support areas. Okay, and while this, of course, is not really, I should say, suggested for high leverage trading, sideways patterns are worse for trading high leverage, okay, because they are not directional. They are directionless, which means that you often get these kind of like low swept or high swept, okay, these fake outs on tops and bottoms. I'll explain why they happen in a brief moment, okay, but that is if you keep your stop losses high because you have high leverage, okay, that is where you're kind of like liquidated or stopped out of your position, which right after the market reverses. Okay, so just like you see, there was a slow, tiny breakdown, okay, which trapped so many people who were bearish below $30,000, and they are still underwater right now. Okay, early this morning they were still, over $35,000, for the Bitcoin. Okay, and they were proportionally way more underwater with regards to what leverage they applied. Okay, and this is this approach number one to trading the ranges. The approach number two is that you trade ranges factually towards or in the direction of the breakout. So if you have an upside breakout of the range, right, then you take a long position, but supposedly and best not really after the breakout alone, so which is this, upside upsloping curve, but you usually should wait for the breakout retest, because what happens is that you see, just like you saw here, okay, those breakouts inside or nearby the ranges, nearby these neutral horizontal price movements, okay, they tend to be deviated, they tend to be disrupted. Okay, and with what often happens is that the supports break, okay, and they are back inside the range, and this thing entirely is a fake out. Okay, hope that makes sense so far. Please let me know if it is clear for what I am saying. Okay, I really hope it's all clear. Okay, just please let me know in the comments. And trading, like the approach number two, is trading in the breakout direction, but you can have split it into 2A scenario where you trade the breakouts, okay, which is way more reliable, way less reliable than trading the breakout retests. Okay, so you go long rather on the breakout retest than the breakout alone. Okay, and it works both ways because you saw, like here, you saw this downside breakout, the down break or breakdown. Okay, but it was intraday basis. It was not confirmed per se. Okay, so what happened is you saw the support breaks, but right after it climbed right back above, okay, and rallied over that. And I'm talking about this upside pullback. Okay, so just for your information, again, this confirmation from breakout retest is very important to your entire profitability. Okay, plus minimizes your improves your risk to reward, minimizes your investment risks. Okay, if played with the same sum of money, let's say. Okay, and the approach strategy number three, approach number three is that you do not trade anything that is breakout, or should I say sideways related, any breakouts, any inside range price action. Okay, you just don't pay attention to breakouts too much, to breakdowns too much, or generally to sideways horizontal trends, quote unquote trends, because those are not directional movements. Okay, so these are the three main kind of like recipes on how to survive trading the ranges. Okay, this is while by applying any of these three points that I mentioned, I promise you're going to save not only big money, it's going to stay in your pocket literally for omitting and avoiding wrong mistakes on trading, but also it's going to help you improve your trading profitability if you know that, for example, it's way more reliable and confident to trade breakout retests rather than the breakouts alone. Okay, so knowing about this, again, quick overview of Bitcoin, we are here still talking about this same range, okay, for ever since the capitulation candle happened on May 18th, okay, you could see that neutral chaotic price action going on, and anything inside is neutral. It's not bearish nor bullish, it's just neutral. Okay, and so far the most bullish thing that I can see about the chart is this actual breakout on the bottom, this fake breakout or the breakdown. Okay, and it is way more bullish than not, because it shows you the entire concept. You know that when Bitcoin topped so far, but I don't believe this is the very top. I believe this is one of the peaks, but still new all-time highs in my opinion are coming this year, no matter you agree with that or not. Okay, you saw 55% decline. Okay, for Bitcoin, you saw a major decline. Okay, and this range happens after a massive decline, and the ranges that happen after massive declines are usually way more about accumulation than distribution, because the wise money understands that valuable assets, fundamentally are valuable assets, when they are heavily underpriced, okay, they are way below the averages, they know that this is a good buying opportunity, because at one point it's going to revert to the mean. Okay, and I'm going to cover the mean reversion also right in a moment. And as long as we stay, or should I say, do not break, okay, above the range, then it's neutral. And as long as we stay inside the range and refuse to break down below the range, it's neutral. Okay, and for your information, again, whatever happens inside the range is not going to be reliable. So best for most of you, for 90% of traders, especially if you trade short-term without good trading system or understanding what's going on because you just joined the market, okay, you're new, most of you would do better if you just do not trade this range. Because trading is all about knowing when not to trade rather than when to trade. Okay, and you can tell there are, well, applied in my Birb Pro trading system. Okay, there is a baseline, which is the main reference point, the average, the hybrid average, okay, which tells you about the average price of Bitcoin. And you have the here view up volume weighted average price trend lines. Okay, and they create, you can tell there is one right after another. Okay, and they create these volume weighted average price trend lines. They show you dynamic changes over the time. Okay, volume weighted average price for Bitcoin. So it tells you that based on volume, Bitcoin is supposed to be trading within this territory, okay, somewhere between $41,000 and $44,000. That is what the averages tell you, okay? So whatever happens below this average is considered technically undervalued, okay? When an asset is underpriced, it's under the average, it's below the average, it's considered undervalued, and it's considered a good buying opportunity most usually, okay? Especially if it happens with the abnormal volatility, because you would see for Bitcoin 15% retracements, 30% retracements, or 30 between 30 and 40, okay, percent. Those were casual, but what happened in here was the 55% drawdown. It was abnormal volatility to the downside, and this entire space below, okay, is this abnormality, okay. This top to the bottom, or should I say to the trend lines, was coming with the 30 to 40% retracement, okay, which was more of like natural. So anything below is considered a good buying opportunity because it's abnormal volatility to the downside. Same way that you could short something that is with the abnormal volatility to the upside. Okay, if the Bitcoin was trading, let's say, right here, and the average price of Bitcoin was this, then you could tell, okay, that this is a fair average price of Bitcoin. So anything in here above is rather, not really a good deal for buying, if you ask me. Okay, so you can tell that the main bearish resistance, the supply, the resistance cluster, happens to be inside this territory between $41,000 and $44,000 for the medium term, for this very range. And note how it aligns with the range highs territory. Okay, so it tells you that, it confirms you from two different sources, from the volume and the price action, okay, that this entire that this entire kind of like, just space around 41, 44 is considered medium time frame supply. So if we manage to break above this with a solid breakout retest that doesn't break through, okay, then we unlock the targets towards $50,000, okay. The ones I would be watching would be somewhere between 52, 53, and perhaps even 56, okay. That would create a supply zone based on the price action and the pre-breakdown levels. You can tell that this very tiny candle, okay, was its low, okay, was the final support before the major breakdown. So if this major breakdown happened, it means that this support, which was the last bullish bastion, once it burst, it had to be of some special technical significance and importance. Okay, that it once broken, it created a big, massive downside candle. Hope that makes sense. Okay, and well, that knowing for the quick overview for Bitcoin, okay, we could still expect some lows, territory tested, 30,000. Even if it tests 30,000 or even $29,000, it's still going to be neutral. It's not going to be bearish because that is what is defined technically correctly by the range. Okay, so here I want to talk to you guys about it. Talk to you for a moment about the market manipulation. Okay, and you have to understand that nothing in this world is perfect, real, or it's especially in the financial markets, at least. You would be disappointed very often. Okay, you would be disappointed because of losing money, and you lose money mainly because there exists something that is called information asymmetry. Okay, and it means that some person, you always, well, with trading being the zero-sum game, for you to win, there needs to be somebody to lose, and for you to lose, there needs to be somebody to take your loot off the table. So the trading is a constant and continuous battle between two entities, okay? And this is a game and a battle for who is smarter, for who is right about the market, okay? And you need to understand that you are not only trading against me, against other influencers, against yourselves. You're also trading against institutions. You're also trading against investment banks. You're also trading against big hedge funds, okay, big trusts, against Elon Musk, okay, against some big companies. And you also have to understand that they have almost unlimited resources to spend to improve their trading systems, their trading strategies, okay? Their trading algorithms. So if you are a big investment bank or an investment company, you usually don't rely on humans with that. You don't rely on humans mainly because of human errors, okay? Imagine being a bank manager or a fund manager, okay, and you fat finger mistakenly and sell 10 million units of an asset instead of 10 shares for some reason, okay? I don't know, you go to a party, you're just hangover, you have your hangover, and you just by mistake click on the wrong button, fat finger that, and crash the entire market and go make your company go bankrupt. So in order to prevent that, these big companies, they invest in algorithms, trading algorithms, bots, okay? And the bots are set to execute the orders immediately when the signal triggers. And this signal can be of multiple different natures. It can be a breakout signal when the price is broken, right? When a certain price level is broken to the upside or to the downside. This can be said based on the indicator, where let's say when the RSI goes below or average below 80 or below, over 80 or below 20 points, okay, on the scale. You can also have very simply a trading bot which analyzes, based on the artificial intelligence, which analyzes the sentiment of the market. You can also have the bot pinned under a Twitter account, right? And guess what I'm talking about? Okay, I'm talking about Elon Musk, of course, right? So there's this chart, okay, and Elon Musk tweeted earlier today, okay, about a joke about Bitcoin. Okay, he asked the joke, how many Bitcoin maximalists does it take to screw a light bulb? So bots are usually coming under, they are programmed to track the main key opinion leaders, the main influencers. And by the main influencers, I don't mean necessarily some YouTubers. I mean people who have impact on the market, people who have influence, like Fed, okay, like Elon Musk, like Bill Gates, okay, and so on and so forth. So what bots do, they take and analyze, especially if they're based on artificial intelligence, they take and analyze the collection of words in a sentence and deduct, okay, its meaning and whether it's more bullish or bearish. So because they know that statistically, whenever Elon Musk, tweets about Bitcoin maximalists, he often just does it either in a joke or in generally in a negative manner to kind of like, just have this like an insult, thing, or like a little bit of laugh, So same way that Cristiano Ronaldo recently just moved this Coca-Cola glass bottle, off the table away from him, and he said that he prefers water than Coca-Cola. So Coca-Cola shares dropped, like entire market, just company lost $4 billion, okay, as a result, as an instant result. So the same way, Elon Musk tweeted about that, and guess what? He tweeted at the perfect top. So it means that this tweet was actually what created the top and triggered the algos, okay? Because I promise you, there is no coincidence. And if you analyze past couple of months, each and every single tweet from Elon Musk has caused severe reaction on the market, be it to the upside or to the downside. Here from today, okay, from over 35.5, okay, thousand, the market plunged, dropped by almost 10%, if you will, almost 9%, okay, by more than $3,000 just because Elon Musk tweeted that. And it's not really people that sell this. This immediate reaction comes only from the bots, okay? So here is a wake-up call to you guys. Elon Musk does not manipulate the market per se. He does not do this, I should say, by himself, right? It's not that he tweets and dumps his all Bitcoin holdings, right? It's bots that analyze based on the artificial intelligence more often than not, okay? Immediate sound, just sound of the sentence, the bearishness or bullishness of the sentence, and they trigger the reaction on the exchange. They sell off. Okay, so the selling off starts right after this very tweet. It can be combination of both bots and people. Okay, but in general, it is not a coincidence that the moment that Elon Musk tweets, okay, the market moves severely. The volatility increases in either direction. This is a cause and result. Okay, this is not an accident. This is not a coincidence. Okay, yeah, just kind of like to let you know, whatever Elon Musk does, it does impact the market, but it's not because, I don't know, I sell, right, or you sell. It's because mainly trading bots do that. Okay, and trading bots, in fact, are the biggest traders. I should say the biggest percentage, the greatest percentage of the traders on the markets are bots. right? Especially when the market is fully institutionalized, and you can tell that there is insanely big engagement from the institutional side on the market. So you can tell that there are even more bots on the market than there used to be a couple of years ago. Okay, I hope that it does make sense. And before I actually just get you some materials that I prepared, okay, I want to give you a funny anecdote, an example. So Berkshire Hathaway, okay, the fund by Warren Buffett, because they're listed, for the price shares. It also has to do with what happens on the markets, of course, right? From the speculative point of view, speculation point of view, and the unpredicted news-driven point of view. Okay, so what happened the other day is there was, I believe there was an Oscars kind of like rewards awards given some couple years ago. Okay, that was like 10 years ago. I can't recall the perfect date, but there was Anne Hathaway, the actress, who actually won some prize, some reward, some award. Okay, and headlines. She made it to the headlines, and the headlines said Hathaway collects the prize, right? Or Hathaway wins, like Hathaway wins an Oscar, wins a reward. Okay, and again, something that was bullish. So guess what? The bots were set for anything that mentioned Hathaway and was bullish, and because Anne Hathaway as an actress won the award for the best actress or something like that, the Berkshire Hathaway shares jumped like significantly. Okay, so that is what means that the bots exist, that they do work, no matter in your favor or against your favor. Okay, they do work, they do exist, they are fully occupying the markets, and I'm talking about all of the markets. And on top of that, the gold is the biggest manipulated market. Okay, so you would have also the next fair example of gold manipulation on the market. So this is actually a commodities chart, okay, which is looking pretty good, but perhaps may retrace as a whole, towards the fair price again of accounting the volume, which is the volume weighted average price anchored at this level. Okay, that tells you that the short-term volume weighted average price is supposed to be here, so it may retest to later continue, right? But one way or another, if we bring the gold USD, or should I say the index gold USD, okay, you can tell that there was a massive decline recently, okay, which was here, and then market tanked by about 8 to 9% as well, right? It was even more, 8%, something like that. Okay, doesn't matter much. But this perfect top this candle came, it coincided in time with Fed's news press release. Okay, and they were talking about potential interest rate hikes in 2023, and that the first steps towards rising the interest rates might be coming. Okay, and as a result of that, of tightening the monetary policy, which is against what the governments have been doing for the past years. Okay, 2020, the COVID crash was only stopped and because of the money, helicopter money. 2020 brought the biggest money increase ever. Okay, and it's very obvious to me that it also was not a coincidence in finance, guys, when the hundreds of billions and trillions of dollars play the role. There are no coincidences. I promise you that. When you are a big company, you cannot just have an accident, okay? Because then when you do something just like that, just out of nowhere, okay, when you don't plan that in before, then you risk losing billions and trillions of dollars. You cannot do this if you're a government, okay? So everything that happens is pre-planned, which should be obvious. So hiking interest rates strengthened dollar. The DXY jumped. The dollar index jumped against a basket of other currencies, global currencies. And as a result, each and every single asset, paper asset, or in general commodity, okay, declined in price. So we are talking about news-driven price decline for about 10% on the top biggest market on this planet. So it is out of question that this press release was followed by a massive decline on the price of gold. Okay, and guess what? The high and expensive commodity prices, especially gold, which is the most strategic and the most important commodity for any government, for any party, for any state, okay? It's not in their favor that this asset just goes too high in price, because as the resources say, as the governments globally have been accumulating more and more gold over the past decades, at the same time, tackling the price down each and every single time to keep it low for themselves, okay? I mean, this is something that is not my theory. This is confirmed with hundreds of times. Let me show you something, okay? JP Morgan, it's from a year ago, not even like 10 months ago. JP Morgan to pay almost $1 billion for manipulating precious metals treasury market. This is by Reuters, the main rating agency. This is not my theory. One of the biggest banks on the planet was charged with almost $1 billion fine for manipulating precious metals. And precious metals are not mainly silver, because silver is cheap, there is not much of it. It's because of gold. Okay, so what I'm sharing here, guys, with you, it is not my theory. Okay, it is something that is confirmed by biggest agencies, the rating agencies on the planet. Okay, this happens. The manipulation happens, and Fed manipulates the prices as well. Okay, because it makes so little sense for them to tighten the prices, knowing that they would just keep printing more and more money because that's what they want to do. Okay, so it is confirmed, in my opinion, that this has been a typical short play, typical way that of manipulating the gold prices. Okay, to keep it low, because high commodity prices, as I said, for copper, for the industry, are something that can disrupt the economy. Okay, it's something that disturbs the balance between an export and an import. Okay, and when the gold hikes in price, okay, and you have a lot of gold in your store and you want to sell it, you want to just export it, then nobody's going to buy that from you because it's expensive, right? And hence, if your main economy kind of like part it comes from the export, you may actually just go bankrupt as a country. Okay, I hope you understand and see the point. So then moving on, actually, I want to show you that also, just like I was talking about the professionalist breakouts, the fakeouts. Okay, this is something that happens. This is something that is called a specialist breakout, okay, or a false breakout. So just like it says, this false breakout triggers all the buy stops placed to protect against the loss from upward reversal and a downward trend to enter a new long position. Okay. So when this happens, and when you're shorting this, when you're shorting the high, you place your stop loss, and your stop loss for the short means you agree to rebuy that if something goes not in your favor. Okay, so you trigger the false upward breakout. Okay, that is called a specialty breakout. From these days, that when the specialists and the market makers would buy stocks heavily at the edge of the resistance level and create a false breakout that once it caught and forced the public to buy after the breakout, they would sell into a profit. Okay, so thus, just like it says, the breakout upward showed in the picture below, okay, was preceded by heavy volume and accelerating upward curve, okay, giving an impression that the stock was soon to explode upwards. Okay, whether this false breakout was a manipulation is somewhat irrelevant today because it does happen, of course. Breakouts of this type do occur quite frequently, and if not protected against, can be painful. So this is a kind of like an official, paper that you can read on that. Okay. What can I say more about this? The most important point about trading stops, you can have it as a trading stop. Okay, you can have your trading stop as 2% over, let's say 2-3% over the certain price, so that the volatility is your stop loss. Okay, not certain level, which is often way more, way better, pretty much. Okay, so again, for your better understanding, you cannot read that document. Okay, it's in the CMT. I want to very quick show you the mean reversion. Okay, and with that, I want to show you the tweets that I liked a lot recently. Okay, and it came from Mike McGlone, which is the Bloomberg Intelligence senior commodity strategist. Okay, and he brought what it says: Bitcoin's 30,000 line in the sand, similar to 4,000 in 2019 and 20. Okay, so he says that based on the mean, based on the average, okay, which is let me just there you go. Okay, which is 20-week moving average on the weekly. Okay, 20-week moving average. It shows you here on the bottom the Bitcoin versus the ratio of Bitcoin to its 20-week moving average. Okay, so when it is over 1, this ratio, over 1, okay, it tells you that that the Bitcoin is over its 20-week moving average. And when this ratio is below 1, it tells you that Bitcoin is below. Okay, so which is this? So anytime that Bitcoin went below, okay, and extremely well below, it was considered underpriced because it was below its average fair price at that time. So this big, I should say, deviation to the bottom in the past 3 years has only happened 3 times. Okay, and each and every single time it came with a massive upside reversal. Okay, so you can tell that there is a big similarity, not in a chart pattern form of point of view, but more of a statistical point of view. So it tells you that on average, historically in the past years, and this ever since the bull market started here, okay, ever since the new brand new market structure came in with the new market demographics, with the brand new investors on board with regards to the institutions and so on and so forth, okay, you can tell that each and every single time brought massive upside reversal, okay, which is exactly what I do refuse to say that bull market is over. I do not believe the bull market is over. I still believe we would see new all-time highs, $90,000 to $120,000, probably Q4. I bet November, December, right? Perhaps early next year. This, like on top of that, of course, the blow off top did not happen just like here. Okay, so you had the rounded tops that lasted 3 months, and this is not usually what happens for Bitcoin. Okay, so many different other reasons for why to believe that anywhere around these levels, okay, no matter guessing the bottom or not, okay, you know that at one point, anytime soon, it's going to at least revert to the mean. And revert to the mean, to the average. Mean reversion is an actual trading system. You can make it your trading system. Okay, so if we go here, just like it says, the third, well, this is kind of like just taken out of context, but the moving average is an indicator of a price extreme. Okay, because the moving average is a mean, any reversion to the mean will tend to approach the moving average. For trading purposes, the reversion is sometimes profitable and a price has deviated substantially from the mean or moving average. So just like, again, Walmart shares prices, the heavy deviation against the average, okay, which was actually here, okay, on below like, here, let's say if we have actually just enlarge that, then you would know that this is the mean, okay, this is the average, and anywhere heavily deviated on top, extremely deviated on top or bottom, tends to return to the average, tends to revert to the mean, okay? So price has a tendency to return to the mean. A deviation from the moving average is a measure of how much prices have risen or fallen ahead of their usual central tendency, okay, and being likely to return to the mean. This deviation then becomes an opportunity to trade with or against the trend, okay? Just checking if it is. I think it should be clear right now. Okay, I think it should be way more clear. So that is why if the price action of Bitcoin is heavily deviated, okay, then at one point it is bound to return to its mean, to its fair average price. Okay, which generates nothing but a good buying opportunity based on a trading system that is based on the mean reversion. Okay. Thank you so much for your kind comments, guys. Kind reminder, if you're watching that on YouTube, make sure that hit the subscribe button, hit that smash the like button as well. Leave your comments, leave your questions so that I can come back to that, answer all of them after the show ends in about 10 to 15 minutes, okay? Kind reminder, hit that smash button, smash the like button, hit that subscribe button, and so on and so forth. We have to push this YouTube algos. You know how it works, guys. If you enjoy what I share with you, okay? So Mike Malone showed you a very brief kind of like a statement, okay, about that the prices of Bitcoin are heavily underpriced against its third 20-week moving average price, okay, and it only has happened 3 times in the past 3 years, okay, and it doesn't mean it has to already make a new all-time high. In fact, I believe Q3 is usually lazy. Okay, and as the seasonality effect shows and proves, Q3 is usually low, lacking the volume, lacking the push, as people are more in the vacation mode. Okay, so they are chilling, they're not trading too much, they are just enjoying, their time off, and you can see lower prices, lower engagement on the exchanges, lower volumes, lower open interests. Okay, so that affects the markets. So usually it is what happens that the market, instead of trending, because it's lacking the push, it's lacking the volume, it's lacking the engagement from the market side, it's usually going sideways. Okay, somehow the colors keeps changing. I have no idea how it works, but it's hilarious. Anyways, right? So perhaps Q3 is going to be more of a sideways, okay, in some random chaotic directions inside the range. But Q4 is supposed to bring the final wave, number 5, which is, I explained that on the last time why I believe, just on the basis of this pure Elliott wave theory approach. Okay, you would have the first wave, impulse wave in the bull market direction, triggered with the market reversal in 2018 December. Then the second wave, which was extended to the downside by unpredicted black swan, similar to this. Okay. Then you would have the wave number 3, okay, which is another impulse motive wave. The wave number 4, a corrective wave, okay. And after this corrective wave, there is wave number 5 missing, which is in the bull market direction, okay. So all of these different areas, all of these different technicals, and not only the fundamentals, on-chain sentiment indicator like market has been extremely bearish for the entire past month. Okay, the fear and greed index is actually at its lows unseen since market crash last year. Okay, and it's staying down there low. People disbelieve that this market is ever going to continue upwards, and the market is always right in the middle of a trend. Okay, here, but they are always wrong at the extremes. They are always wrong at the extremes. Right, end of the day. How can anybody dictate to you whether the market is bullish or not if they just joined yesterday and they never opened a book? Right? Think about that. Yeah, so what I'm saying is, this, in my opinion, no matter the top or the bottom, guessing the top and the bottom is like a lottery. It doesn't matter. In the long-term picture, what matters is sustainability of a trading system. okay, and that you can repeat your wins over the losses. If you are more profitable on average after hundreds of times, after hundreds and thousands of trades, then this is what defines that you're a good trader. Okay, not that you won once for 500% for applying 100x leverage. That does not define you as a good trader. In fact, that defines you as a terrible trader because you don't know the trading management. Okay, so I'll have right now about 5 minutes for you. To answer some of the questions, right? So make sure, again, to leave some comments because I'm not going to be able to answer all of the questions. Okay, but feel free, again, to smash the like buttons on the YouTube. Hit the subscribe button as well on YouTube. Let's keep our YouTube going. We are brand new quality for delivering daily uploads for traders. Go for it. And very brief moment, okay? Let's talk for a moment. Okay. There is a Polish question, actually. Of course, I could talk Polish, but nobody would understand me besides Polish people. So out of respect to everybody who's in the chat, I'm going to answer that. So the question is, what are you thinking about the large head and shoulders? So this large head and shoulders is, as a matter of fact, something that is too obvious, in my opinion, to happen, right? So when the things happen on what, like, chart patterns work because we make them work, because we believe that, you know, it's going to make it work. But with this difference, that if something is too obvious, and if something lasts too long, okay, then it rarely ever happens in the direction that we could expect, because the market makers, those who actually know how to make the market, I should say the male whales on the markets, okay, they would perfectly know that you read in the book, okay, that average trader, average Joe with $100 position, okay, would read the book about technical analysis, and the first page that they open would be that the head and shoulders pattern is usually bearish, so they would short it before it even completes. Okay, that is when you usually short a head and shoulders pattern right after it breaks out, or should I say breaks down, and confirms the breakdown. Okay, so technically that is the breakdown below the new what defines contributes to the new downtrend is what your triggers your entry, right? People usually short head and shoulders before it even forms the second shoulder, which is why head and shoulders pattern is usually very often faked. Okay, so what I would expect is, knowing that Bitcoin is heavily undervalued for so many other reasons that I just mentioned, okay, I could expect at best some sort of like a fake out going on. Okay, most of the people are bearish here, and market is always wrong at the extremes, so I could expect something like this to happen. Okay, so long story short, this is the head and shoulders, which was on the top so far, rounded top. Okay, and this is also, the head is part of a bigger head and shoulders, so that is what I call the fractal nature, when a pattern consists of a smaller pattern. Okay, and that is my guess about that. Okay, what do you think about altcoins in this BTC choppy market? Altcoins are going to take hit as long as Bitcoin does not provide enough of stability. Okay, because the crowds are fearful, crowds are extreme. Oh shit! You didn't see the head and shoulders. Sorry about that. I was talking about this head and shoulders. Okay, so yeah, all over again. I keep forgetting to turn on the screen sharing. So I was talking about how head and shoulders are usually not reliable. Okay, because people usually short it before the right shoulder even confirms. So best way to short head and shoulders typically is to wait for the breakdown and to successfully retest on the bearish side. Okay, so what triggers is an actual breakdown of a new created support, which constitutes and creates to a new downtrend. But until that happens, you know, people would believe that this is a bearish pattern. They've just read in a book about that. Okay, so the wise money who manipulates and who rules the market, okay, who trade billions and billions of dollars, would perfectly know that you would short this before it even forms, so, or even after it breaks out, okay, to the bottom, to the downside. And what happens is, usually you see a failed pattern. Okay, so which is how I exactly suggest that we would see some sort of like a consolidation, some sideways going on for Q3 for the next months. Okay, and Q4 for the final rally that, let's say, just out of the Elliott waves comes. Okay. Sorry about missing the screen, and just keep doing that. Do you think in the very short term day we will see a brief pump as the XY goes down, or they are not very cointegrated? They are cointegrated. The biggest correlation, the strongest correlation, actually inverse correlation, is between gold prices and the dollar prices. Right now, there has been, definitely an upside spikes going on DXY, some short-term relief, I should say, for BTC. Here, well, honestly speaking, honestly talking, guys, I do believe that if Elon Musk had not tweeted this joke early this morning, we would see probably continuation towards the upwards, right? But because the balls go crazy over Elon Musk, we saw what we did. So I would not really associated too much with the DXY, to be honest. With the entire China market of traders gone, does this change the volume indicator interpretations? But they are not gone; they are just moving the places, right? What else? Tanzania and Senegal is about to start adoption process. What do you think about the federal government start using BTC as legal tender? I'm for it. Do this. I'm very much for it. I'm super for it. I really have big respect for Nigeria, for Senegal, for Tanzania, for all the third world parties, third world, just countries, because they are the ones that actually strive the best. Okay, the biggest growth rates. I'm a big fan for those. That's where economy happens right now. Okay, what else? Have you ever lost everything? I'm not sure if it means liquidation. Have I been liquidated? Yes, I have been liquidated so many times in the past, especially when I was not knowing what I was doing. Okay, which is why I rarely ever trade futures. I rarely ever trade futures, derivatives, mainly focus on the spot price. Okay, you're very knowledgeable. Greetings from Canada. I very much appreciate it. Best regards to the Canadian friends out there. Could BTC and Ethereum split the expected market cap of BTC expected? I'm not sure. This is worded enough well for me to give it a proper answer. But if you ask about can Ethereum take over Bitcoin at one point, then my answer is probably no, at least for now. Okay, I think that would be all for today that I guys have for you. Okay, I'm very honored to showing off some of these materials, sharing all this knowledge for free, which each and every single one of you. And before you go, I want to give you a note that we on my free website, thebirbnest.com, with the B, not with the D, thebirbnest.com. Of course, you would have the subscriptions, okay? So you would have the subscriptions, for the calls only, for the exclusive Nest Club if you want to improve your trading, okay, and learn about that, okay, and private mentoring if you want to be, mentored by myself or my team. There's always a way for that. And best part is that you have 7 days free. You have 7 days free trial, so you don't need to pay anything. Nobody's going to charge you a penny. All the money stays in your pocket. No credit cards required, no charges, no anything. Just go ahead, put your email address, okay, first name, and we're going to get you into the old mailbox, the invitation, and all the steps, instructions on how to get it. 7 days free, okay? You get the most reputable trade group since 2017 of this kind. We've been through the bull markets, we've been through the bear markets, ups, downs, FOMOs, FODs, miners capitulations, insane pumps, okay? And we have grown to become one of the largest in the space. So if you enjoy all that I shared with you, if you feel you could improve more about your trading, if you're serious about your money, then come and hang out with us, see how it looks. 7 days free, nobody's going to charge you for that, okay? 7 days free of your trading improving, okay? That is what it is. But if you're not serious about it, if you're just here to goof around, to play and spread some negativity, some negative, vibes, don't waste our time. Don't waste my time. Don't waste time on my team. Okay, I care about my team. I will not allow to anybody being negative to come and disrupt my team. Okay, I will not allow that, or thousands of other members in the Discord. Okay, we have so much channels going on, so much engagement. I have my personal channel, okay, where I share all my trades and all the thoughts on the market. We have video reports. We have insane amount of the overall main discussions on the channels for the crypto, for the legacy markets, okay, for the webinars, for the calls. We have the market scanners, okay, going on. We have the legacy scanners. Okay, so it saves you so much time. Of course, when you are not a member, you cannot get that. Okay, but you have all of that, and it's all included. Okay, and you're going to get 7 days free. So make sure you go to thebirbness.com. Okay, I just put it in the chat. And guys, I really hope you enjoyed that. And if you did enjoy that, make sure to hit that subscribe button, smash the likes, and leave some comments if you want me to answer, because I know there are so many of those. Okay. Guys, I love you all. That's all I got for you today. I hope you enjoyed that. And stay safe. God bless you. Bye. That's all.